What's up, splurging virgins? Let's talk about Nvidia earnings because nothing says America in 2025 like waiting to see how many billions Jensen Huang made selling graphics cards to everyone except gamers. You remember gamers, right? The guys who used to buy GPUs to play Fortnite. Now they can't even afford to run Minesweeper because every chip is in some AI server teaching ChatGPT to write bad poetry and even worse public apologies for these social media influencers. Now, Nvidia was the last big tech to report this season. The finale, the fireworks. Wall Street was basically treating it like the Super Bowl, except instead of nachos, you had Goldman Sachs interns chugging Celsius in the front of Bloomberg terminals. Because Nvidia is the stock, a $4 trillion company, bigger than most countries. If AI is the new oil, Nvidia is Saudi Arabia, only with a leather jacket and sneakers. So here's what went down. Revenue, we saw 46.7 billion. That's up 6% from last quarter, up 56% from last year. Yeah, most companies brag about 5% growth. Nvidia laughs and calls that a Tuesday. EPS came in at $1.05 a share, beating expectations of $1.01. Wall Street was ready to pop champagne over 4 cents. Data center revenue came in at 41.1 billion. That's up 56% year over year. But here's the kicker. It missed estimates by like 200 million. And in this market, missing by 200 million is like forgetting your anniversary. Technically small, but you're still sleeping on the couch. Gaming revenue, we saw 4.3 billion, up 49% from last year. Remember when people said crypto mining was dead? Yeah, apparently so did Nvidia. So it was a beat, just not the type of beat Wall Street wanted to hear blasting out of the AI club. And what happens when Nvidia sneezes? The market catches pneumonia. Stock dropped 2%. Traders panicked. CNBC put Jensen's face on TV like he just announced aliens are real. Here's the thing. Nvidia didn't miss badly, but expectations were so high, they might as well have been priced for immortality. This stock rallied 35% year to date, hit a $4 trillion market cap, and Wall Street expected Wang to walk on water while building an AI powered ark. He didn't. He just made 46 billion in 3 months. What a slacker. Bum. Anyways, let's talk about Jensen's obsession, the Blackwell chip. He called demand extraordinary and said production is running full speed. Translation, every hyperscaler, Amazon, Microsoft, Google, is basically calling him like it's a drug deal. Yo, Jensen, you got that Blackwell? Half of the conference call was him saying AI is the future like it's 1997 and he just discovered the internet. But hey, it's working. Data centers are throwing trillions into AI infrastructure, 600 billion a year in capex, with Nvidia taking the lion's share. By the end of the decade, we're talking 3 to 4 trillion in AI spending. That's not a market, that's a religion. And Jensen, well, he's the Pope. But what's every good story without a plot twist? China. Nvidia can't sell its H2O chips there because Trump banned it, then unbanned it, then said, okay, you owe Uncle Sam 15% of sales. That's not a trade policy, that's a mob shakedown. Nvidia says China could be a $50 billion opportunity this year. That's the kind of number you can't ignore. But for now, their outlook doesn't even include China. So Wall Street's sitting there going, do we value Nvidia as an AI monopoly or as the company waiting for Daddy Trump to give permission slips? Well, if it's one thing we know about Wall Street, it loves something more than cocaine. It's candy. Nvidia announced 60 billion in new buybacks. That's right. They already returned 24 billion to shareholders this year. And now they're loading another 60 billion into the gun. Let's be real. Buybacks are corporate cocaine. They juice EPS, make shareholders feel rich, and distract you from any pesky questions like, hey, why is gross margin down from last year? Here's why this matters, though. The market. Nvidia isn't just another stock. It's the stock of the decade. It's a 7% stake of the S&P 500, 20% of the Nasdaq 100. If Nvidia goes down, your portfolio goes down. Your 401k goes down. Hell, even your DoorDash bill might go down. Okay, not the last one. It might actually go up. This quarter shows us two things. AI demand is still insane. Nvidia isn't slowing down, it's just normalizing from psychotic to regular crazy. Geopolitics is the new earnings risk. Doesn't matter if your product is a holy grail. If Trump decides you owe him 15%, well, you're going to write that check at the end of the day. So, what's the takeaway here? Nvidia is still the king. They beat earnings, raised guidance, and they're printing money like the US Treasury. But the stock dipped because in 2025, beating estimates isn't enough. You have to beat physics, geopolitics, and the Federal Reserve. If you're a long-term investor, you're probably still holding Nvidia. If you're a trader, you probably just blew up your account on 0-day calls or weekly calls in this case. Either way, remember, Nvidia isn't just a company anymore. It's the market's mood ring, okay? And right now, the mood is we love AI, but we're scared of China. All right, that's the Nvidia recap. Remember, the AI race is on. And unless you're Jensen Huang, you're not the one winning it. So smash that like button, subscribe, and tell me in the comments, did you buy Nvidia before $100? Or are you the genius who's been waiting for a pullback since 2020? Go ahead, be honest. Have a great one. See you at the end of the day.